There is a way to pay $0 in tax during your working holiday visa, and it is 100% legal. I'm Arnie. I've been traveling Australia for more than 4 years, and I've worked in agriculture, hospitality, construction, and mining. And in this video, I'll explain you how tax actually works for travelers on the working holiday visa in Australia, how much tax you should be really paying, and how to legally reduce your tax bill, even down to zero in many cases. So here we have the tax rates for working holiday makers during this year and the next one. It both works for the 417 and 462. We have the same tax bracket, and the way it works is that you pay more or less depending on which tax bracket you are at a certain point during your financial year. So you pay 15% for the first $45,000, and then from 45,000 to 135,000 you pay 30%, and then after 135,000 until 190 you pay 37% of tax. So here it says 37 cents for every $1. It's the same as 37%. This is like a percentage. It's easier to think it in that way, but it has to be during the same financial year. And in Australia, the financial year goes between the 1st of July of every year until the 30th of June of the next year. So it is not the natural year from January to December. Then everyone in the working holiday visa, either you are on a 417 or a 462, will have to pay these tax brackets here, except you are from one of these countries, which is an NDA country. And countries with an NDA with Australia means that they've signed a non-discrimination article between their country and Australia for tax purposes. And what that means for them is that they can be considered as an Australian resident for taxation purposes. So tax is very different. The full list of countries with an NDA with Australia are this one. It's Chile, Finland, Germany, Israel after 2021, Japan, Norway, Turkey, and the UK. And what it means is that instead of the 15% and 30% tax brackets, you will have different ones, which I'll show you here. So this is the Australian Resident for Tax Purposes website. And if you are an Australian resident for tax purposes, you will have different tax brackets, which are this one. For the first $18,200, you will pay 0% tax. Then from this 18,000 up to 45,000, you will pay 16% tax. So you're essentially getting the same tax as a normal working holiday visa, except that the first 18,000 are free, so you're not paying any tax. So this means that if you work really little in Australia in a financial year, so let's say that you go to Australia in April or May, and you just work for 2 or 3 months in one financial year, and during this time you make $18,000 or less, you should pay 0% tax on every dollar that you earn. So that is one of the ways that you can pay $0 tax in Australia, is to work around the financial year change. So if you make $18,000 on one financial year and then $18,000 in another, you would pay 0% in all these $36,000. So this is one of the ways that these NDA countries can pay $0 in tax during their working holiday visa. Then back to the normal working holiday visa tax, which we have the 15% for the first 45,000, and then we have 30% above that. I'll explain you a really easy way to understand your tax. So if you have one single job during your whole working holiday visa, you will pay 15% for the first 45,000, and then after this 45,000, the same company will know that you've generated over 45,000 in that year, if it's within the same financial year, but the company will know it, and then they will automatically change it to 30% after that. So you just pay the percentage when you are in that tax bracket, and then as soon as you go above, it gets changed. Then the problem here is that for most working holiday visa travelers, you not only have one job and you have multiple of them. So that's where all the confusion comes. And the thing is that employers, they do not speak between each other, so they do not know how much you've worked during that financial year. So it is your own responsibility of keep track of it. And then if you surpass these $45,000, you are the one that should be telling them that they should change the tax to 30%. But essentially, you have two different strategies here if you want to work a lot and you are going to be passing these $45,000. Strategy one is that if you do not want any headaches or anything, try to keep track of it, and as soon as you pass 45,000, tell your current employer to raise your tax so you don't get any nasty surprises at the end of the financial year in your tax return. Because if you don't do it, you will keep paying 15% in a point that you should be paying 30%. So that's when you hear that some backpackers have to pay in their tax return $2,000, $3,000, $4,000 because they didn't pay the tax that they were supposed to pay in every given time. Then if you don't want any problems, try to keep track of it, and as soon as you go above, tell your employer so you will not have to pay in your tax return. Then the second strategy is to get paid 15% on all your working holiday visa and use that extra money in hand that you have to use it to upskill and get more ticket certifications and go to the next level. Then if you use this extra cash that you have on hand to upskill and go to the next level, you can then bring down your total tax that you owe the ATO. So then essentially what you're doing is using some of the tax money that you should pay later to upskill and go to the next level. Now you know how tax brackets work in Australia with your working holiday visa and how some backpackers manage to pay $0 in tax or very little. But if you want to take full advantage of these tax strategies, you need to choose well between the ABN and the TFN. So watch this video next where I explain the main differences between the tax file number and the Australian business number and how to avoid the common mistakes everyone does.